Hi folks, it's Dr. Jeff Camarda with this month's A Word from Jeff, this one entitled, Whither, Venerable Bull. And of course the whither means, where are you going? And of course venerable can be just a nice way of saying very old. And in this case, this decade-long bull market is getting mighty long in the tooth indeed. So the big question is, how likely is this old fellow to continue to wander up the hill before heading over it? The world has become a much more interesting place in the past 6 months, mostly stemming from actions of the Trump-led U.S. government. Massive tax relief for corporations and significant deregulation, but massive tax relief for corporations and individuals has goosed the U.S. economy to growth levels not seen or even dreamed of in years, with plenty of blue sky seemingly ahead. Adding fascination to interest, the foreign policy landscape has been reformed almost beyond recognition, with Korea, the Koreas I should say, tariffs poker, some would say tariffs roulette, and the G7 recent drama as only the leading of many bulldozers moving the earth around and changing the landscape. Risks seem to abound, with an Asian military meltdown and a protectionist global trade freeze leading the list of most profound fears, to say nothing of renewed fears of a North Korean nuclear attack on Guam, Japan, Hawaii, or even the U.S. mainland. So far, Mr. Trump's Singapore Sling has had a calming effect, but the future and his actions are far from certain. Curious indeed that the markets have largely reacted with a collective sigh. So at least so far as early to mid-June here. And this is really fairly astonishing, with the possibility of devastating global war and near certain restructuring of the economic and military alignment of East Asia, with grave impact to Japan, South Korea, China, and the U.S., and many other important states in that area. And number two, profound economic saber-rattling circling the globe at an elevated pitch, as close as Mexico and Canada, with a specter of barrier trade stifling the prosperities of virtually every important economy. Rumblings of trade war with Canada, China, Japan, Germany, the UK, France, Mexico, and countless others have been booming for many weeks, with no signs of a new deal in the offing. If tariffs and other barriers really hit, profits, incomes, and markets will plunge, if not crash, and we'll be all poorer, each of us, everyone. Interesting times for sure. So why does the market seem so complacent? The easy answer is the collective wisdom of the market. Many millions of humans with many billions of skin in the game believe the probability of bad outcomes to be very low and the probability of good outcomes to be much higher. That's pretty much how the market works, as kind of a weighing and a voting machine and a probability estimator. Good outcomes include a North Korean solution that promotes regional stability and prosperity, enhancing regional and global trade, and new global trade deals that really reinvigorate the world's economies and drive the U.S. and others to an economic buoyancy and vibrancy not seen in perhaps half a century or longer. I am in this camp. While the Trump doctrine seems a singular, disjointed jumble of spontaneous disruption, there is a very good chance of a profound method to the madness. His mantra of making America great again implies a required sea change in the world economic order in order for it to come to pass. The U.S. remains the 600-pound economic gorilla in the world, with enormous coercive power to assert its own agenda, should it choose, and many believe that it hasn't for a long time, perhaps in the belief that we're so strong that we can leave money on the table and still remain quite rich, and there's really much truth in that argument. But on the other hand, if America chooses to wield every card and tool at our disposal to truly focus on America's interests first, which hasn't happened in my lifetime, really, that I remember, the U.S. economic miracle may ignite anew with truly spectacular consequences, not just for us, but for the world around. It seems that Trump has chosen this path, and regardless of where you stand on that stance, you stand to profit if he pulls it off. The markets, particularly the U.S. markets, seem to be pricing in a very good chance that this will happen, regardless of the aftermath of Trump's Singapore fling. So whither now? The aging bull? The sage bull? The ancient bull? As probable as is the market belief that Trump may pull off peace and prosperity, there is no question that he is playing with fire and embracing profound risk on many fronts. And again, as probable as the market believes in good outcomes, the downside is pretty dark indeed. He is playing with fire and embracing profound risk on many fronts. Things could go far wrong and collapse into a bear market or worse, though I think the odds of this are quite low. More likely, the market will sense, rightly or wrongly, the appearance of failure and suffer many inevitable bumps and plunges. This has been the pattern for much of 2018, much of history in fact, and I expect that this will continue and get even worse as we wind through 2018. All this considered, my forecast here in mid-2018 is for increased volatility, more bouncing around to value, breathtaking ascensions and plunges, but also a resurgent bull market, particularly in the U.S. A resurgent bull market in the U.S., which really is still sporting some fairly frothy valuations in a lot of sectors. But the combination of tax cuts and a reformed world trading stage could, and I think will, shove the U.S. economy into an overdrive not seen since the 1990s at least, and propel corporate profits and stock prices higher and longer than I believed a year ago. And again, the fuel that given our somewhat stretched valuations is increased profitability. Profits go up, it justifies higher stock prices even than where we're at now. The old bull has a new lease on life, as it were, and while it's important to maintain diversification, I think very important in non-U.S. issues, which again we still believe to be quite undervalued relative to the U.S., U.S. shares could have an even longer way to go before ultimately collapsing into a severe correction or bear market. The caveat, of course, is that many U.S. stocks are still quite richly valued by many measures and the estimates of the majority of analysts and market pundits. So careful buying of quality issues at bargain prices, still possible if one is careful, is quite paramount. That certainly was a mouthful. Those of you that finished the video, thank you so much for watching. But I really think that this is an important inflection point, and I'm really quite enthusiastic about the prospects for the country, the U.S. market, and prosperity in general. Until next time, thank you so much for watching. Enjoy your midsummer. This is Dr. Jeff Camarda. We'll see you soon.